Welcome back to Trader TV Live in conjunction with FIS. We've covered the trading that investment managers, banks and risk managers have to manage and engage in during a known market event. Now let's discuss post-event, how that is analysed. Guys, in terms of your review and reporting process for post-event analysis, what sort of processes do you have? To start with you, James.
Yeah, sure thing. So, I mean, essentially, what we're talking about here is a sort of microcosm of the broad process, and that is to say that it needs to be robust, repeatable and iterative. And so information that we can take from how markets have responded, how our portfolio has responded, our understanding going in and how that compares to the reality coming out. That's all useful information to us to feed back into the process to make sure that, essentially we're being as robust and as, careful and as diligent as we can, absolutely. In that respect, we have a series of meetings on a weekly basis where we can have these discussions both in terms of what the future may look like, but also going over the past. How did events transpire relative to our views? How's that affected our portfolios? Does that require some adjustments along the way? So absolutely that fits into the normal sort of process. In the rare instances where something really has come out of the blue or shocked us or surprised us, we will have a conversation there and then because we need to, in real time, truly understand, because obviously we have client money, at risk, if you like, and we're very careful about that.
That's very good. And Sean, does your review process differ at all?
It differs. I mean, essentially it's the same process, but the difference is I have a larger toolbox, being that leverage, longs and shorts, multiple different, multiple markets. What we do, what I would add on to the process, we have a smaller team, so it's more ad hoc, discussing if we did the right thing or not. But there's also, we go back and we look at what markets were tradable at the time, and did we execute the most efficient market to augment our view if we needed to do it at the time. So, just making sure that I'd like to think that we do check all the markets and make sure we're shorting the richest thing and buying the cheapest thing. But it's sometimes it's not the case. I have to admit. So we do go back and review, and it has changed a couple things on how we've handled liquidity.
That's very good. And then how do you bring the sell side and risk teams into that discussion? Because I'm guessing portfolio management and trading is an ongoing discussion, probably on a daily basis or at least weekly basis. So how do you bring those other factors in, including counterparts? James, do you want to start?
Yeah, sure thing. So, I mean, again, that's a process, and you're talking about actually probably two distinct sort of segments. One of which is the notion of best execution. We have a responsibility to provide the best execution that we possibly can for our client base. And that process is essentially ongoing. It's always and everywhere. Now, depending on which asset class, some of them are more automatable and some of them are more sort of minute by minute, if you like. When you're talking about OTC products and illiquid products, it can be a bit more nuanced, and there does need to be a bit of expertise in understanding market conditions and where what may look like a bad price is actually a relatively good price because of the prevailing conditions at the time. And then obviously you have a separate conversation, a separate process and relationship with our counterparties who are providing us that liquidity and execution, as well as other services. And that process is certainly much bigger than our desk. That covers all asset classes. We have specialist teams and specialist, people that are involved in a kind of quarterly review process.
Quarterly review, and you have a quarterly review process as well?
Exactly, and since we're an emerging manager, it's a give and take on how helpful we are to our counterparties and how useful we are. Our trading volumes, matter to certain counterparties and maybe not so to others. But I think at the end of when you come in with the numbers and with the rankings, very seldom are people like, oh my God, I'm fifth. I mean, they kind of know if they're hitting or missing on things. But it is also a good checkpoint to see, the people that are providing me with the best service, are they also getting, the same look on the volume? Because you want to reward good behavior.
Absolutely. And Mattias, you talked about the importance of systematic performance and system integrity in the trading process. What sort of data can be used to analyse that, and how do you see the review of operational performance?
It depends on the desks, but if I take an example, a bond desk contributing prices to venues in the RFQs, for example. It is a matter of publishing the relevant data for the traders. So it can be like some liquidity score numbers that are provided out there with from vendors, and also the composite price to do that. And the banks and the sell side as the buy side, they are gathering a lot of data and using it. And it is a matter of presenting the right data in that moment, because if it is in a shaky situation, there might be a lot of RFQ pop-ups on the screens. Mm-hmm. So it is a matter of showing the right data than just sort of showing a myriad of too much.
Yes.
So, and that is also something that they can be, of course, revised afterwards. Okay, do we have the right number, sort of the right liquidity scores and the right sort of composite price and so on? But on the sell side, it's also a matter of trying to explain the P&Ls, for example. So reviewing processes, I mean, they also have the MiFID II requirements on the best executions and some RTS reports and all these things. But something that is common among our clients is that they try to explain the P&L, how you ended up in that one. So they look at, okay, how much is coming from moves in the credit curve, how much of the P&L is coming from time decay, if there is some shifts on some inflation curves, for example. Mm-hmm. So it is a matter of trying to explain that, or trying to understand it. But I mean, to reviewing a certain sort of risk measurement on the sell side, they have pretty robust rules from beginning. So it's not like the traders and sell side, they just need to sort of stick to that. Yeah. Of course, they can have inputs, but I mean, the process of reviewing these things is pretty massive at banks. So it's not like they cannot change it over a short period of time.
Sure. I mean, we've heard a lot about in sort of the press about transaction cost analysis on the buy side, particularly. Obviously, in fixed income, that's challenging because there's less market data, because there's less liquidity. So just to finish, could we just perhaps talk about how valuable is that in the review process, do you think, at the moment? And to what extent do you think, is that art as well as science? James, sorry, Sean.
Yeah. I mean, we go through and score our liquidity on a weekly basis, right. And we produce our monthly report on that. And what we do is we gather on the buy side. We have one thing when you go from the sell side to the buy side, you're amazed at how much more information you have. And so we take all the liquidity, we monitor our bonds and make sure they have the liquidity profile that we want, because if the market were to turn for some macro reason, and I have a bond that I thought was liquid in an illiquid market, I won't be able to sell that bond. So I need to stay more liquid and on top of my liquidity, and we do that review on a weekly basis.
That's great. We're going to have to wrap up there. So Sean, James, Mattias, thank you very much. That's been excellent.
Thank you.
The recording of the show will be available on this page, as well as tradertv.net. I'd just like to thank James, Sean and Mattias, and you for watching Trader TV Live. Please follow us on Twitter at TraderTV and visit us at tradertv.net and etftv.net. Thank you very much for watching.